My name is Rahul Singh. I am the CIO Equities at Tata Mutual Fund, and I manage along with my team various categories of funds, which includes multi-cap funds, on which obviously there have been some changes by SEBI, and there are a lot of queries which have cropped up in the minds of investors. So what we thought is we will make this video and try and answer all these questions as a one-stop solution to whatever queries you might have or investors might have. So let me first start by explaining what a multi-cap fund is. So if you look at SEBI, when they categorize these funds, they had different categories of funds in which they have said that mutual funds should have only one fund per category. So if I am Tata Mutual Fund, I'll have one large cap fund, one large and mid cap fund, one multi cap fund, one small cap fund, mid cap fund. So, these are the five broad categories. So for simplicity's sake, I'm telling that each category, the mutual fund house is allowed to have only one scheme. So multi-cap scheme, as the name suggests, has the flexibility to invest not only large caps, but mid and small caps as well. So it is a very different scheme from a traditional large cap or a traditional focus fund or a traditional large and mid cap fund, in the sense that the fund managers have the flexibility to invest across all the market cap categories. Now, typically, if you look at if you go back 3 years in 2017, the investments in large cap, mid cap, and small cap used to be in 65, 70%, 20%, and 10% in that kind of ballpark as a percentage of the total assets. Somewhere along the line in 2018 and 19, some of the larger multi-cap funds became very lopsided in the favor of large caps and mid caps, with very, very minimal stake in small caps or minimum exposure to small caps. Now, what that does is that change the nature of the product, that you're calling yourself a multi-cap fund, but you have very little exposure to mid and small caps. So SEBI came up with a regulation 1.5 weeks back or 1 week back that they prescribed that in a multi-cap fund, you have to have only a minimum of 25% in large cap, minimum of 25% in mid cap, and minimum of 25% in small caps. Which means in a multi-cap fund, what SEBI indirectly told the fund managers and the AMCs is that you could have 50% in large cap, but you have to have a minimum 25% in mid cap and 25% in small cap. And they put a deadline of meeting these norms by January 31st, 2021. And I think that created a situation where, because the current positioning of the multi-cap funds, especially of the larger multi-cap funds, is such that they need to add significantly more mid-cap and small caps, it would create a significant amount of shift in the portfolios in a very short span of 4 months. And small caps, mind you, are comprising very illiquid stocks where the volumes are not very high. And if the funds were to go and change it over the 4 months, it will lead to a rally in the small caps and maybe even if the rally continues, maybe even a bubble there. So it could turn out to be counterproductive from a small investor's point of view. If the larger funds were to buy it in a short span of time, that to 25% of the portfolio, as compared to say 5 to 10% of the portfolio which they are owning is small caps today. So 5 to 10% of small caps on an average, which you can see in the portfolios of various AMCs, going to 25% is a very sharp change. So that is number one issue which is there. For the mid and small size multi-cap funds, for example, we have a fairly mid-size multi-cap fund where we would have between 10 to 12% of small cap today. It's less of an issue because incremental increase in small cap required for us, given our size, is much lower. But generally, for the industry as a whole, it means a big shift in a short span of time. I think the investors should look at it as obviously something which you should, analyze which fund do you own. in multi-cap schemes, what is the small cap exposure, what is the size of that multi-cap scheme, and then take a call on what in future can happen. What SEBI though has told very clearly is that you don't have to buy small caps and you don't have to remain a multi-cap fund. Today, SEBI is allowing the flexibility to change your category from multi-cap to say large cap or merge your multi-cap fund with the large cap fund. Because a lot of fund houses may not like to change the positioning of their fund so drastically in the next 4 months and take a risk of buying something which is small caps very expensive and therefore it being not a very good experience for the investors. So most of the large funds where most of the large multi-cap funds would, I think, seriously explore the option of changing their categorization to another category, whether it's large cap or large and mid cap, or any vacant category which they might have, or they might merge it with an existing category. So if they have a large cap fund, which is not so big, if you have a large multi-cap fund, they might merge it and call it a large cap fund, and then make the multi-cap category vacant where they can do, further issuances. So I think that is an option which is open. So I don't think investors should be today panicking about what could happen for a multi-cap fund. Clearly, there are options available even for the larger multi-cap funds to manage the situation. For mid and small size funds, like I said, we have a very clear option of increasing small cap, and for us, it's going to be less of an issue. Or for fund houses which are of similar size, it is less of an issue. Now, AMFI has also gone to SEBI and represented one key item, which is that if you look at the BSE 500 index, small cap has only 6% weightage in that. So, AMFI is going to make a representation to SEBI and see if SEBI is willing to reconsider its 25% floor, the limit which they have put for small caps. I think you could see some developments there in the next maybe few weeks. Also, there is potentially a likelihood of SEBI allowing more time, not just January 2021, but potentially maybe 3 more months, hypothetically, as an additional timeline to meet these norms if they don't relax that 25% cap. But even if they don't do any of that, I think the option for the larger multi-cap funds is to change their category to merge it with the large cap fund. So I would not really necessarily panic. Given that if you have a multi-cap positioning, I don't think it should be seen as a negative development, which necessarily you have to act upon or you have to redeem your multi-cap investment. I think if you are looking at multi-cap as a category, clearly going forward, you have to look at mid and smaller multi-cap funds as potentially ideally placed to take advantage of this shift, because all said and done, it is very clear with this regulation that there is going to be more incremental fund flow into the small caps, which means we were anyway we have been saying that mid and small caps have become more reasonable compared to large caps. So we had become indifferent. In fact, in all our funds, we had been adding mid and small cap funds. And I think the fund flow towards mid and small cap would increase because of that. So clearly the categories you should be looking to invest in are large and mid cap funds and multi-cap funds, with the caveat that in a multi-cap fund, you have to look at funds which are reasonable size, not very big size. And when you look at the portfolios, my advice would be to look at the portfolios closely and see where the small cap positioning is today. If the small cap positioning is between 10-15%, it is fine. If it's more, it's even better. But if the small cap positioning is like 5% or less, that they will have to buy more small caps if they don't convert themselves into any other category. And that creates a risk because you might end up chasing the market or increasing the small cap valuations. And therefore, it may not turn out to be a good experience to buy those multi-cap funds. So that is how I would think about it. So first thing is not to panic because the large multi-cap funds have an option. Second is to look at how you will take advantage, which is, like I said, to buy a mid-sized multi-cap fund. Also to look at mid and small cap category as a category which you should look at more favorably. So if you don't have any exposure to mid or small cap funds, I would strongly urge over the next 6 to 12 months to start an SIP or STP into these categories. Not commit 50% of your investments in that, but 5 to 10% of your investments should start going into mid and small cap categories, because that's where I think the fund flow is going to be. That's where the valuations are reasonable. And frankly, that is where more of the opportunities of a new post COVID world are emerging. E commerce, most of these opportunities will come up in mid and small cap. So once again, I think it's what SEBI is trying to do. You might see some changes in that, but I don't think it is something which is unmanageable given the flexibility which SEBI is allowing. And I think there are some advantages which, as an investor, you will start to see in the mid and small cap. So that's it from me, and thank you for listening. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.